Macys is one dividend stock down 53% that I think you might regret not buying on the dip here. I'm going to explain why I think that's the case in this video, so stay tuned and let's begin. Starting with Macys dividend yield. Macys is offering investors a robust dividend yield of 3.64%. That's nice in and of itself, but also as a dividend stock investor, you can reasonably expect Macys to increase this dividend over time as the company recovers from the cost cutting campaign it implemented during the earlier stages of the pandemic, and as the economic reopening sustains, Macys keeps increasing, getting its cash flow back on track, paying back debt, and making more money available to return to shareholders. So this is an interesting opportunity for dividend stock investors. Now, I want to highlight Macys revenue over the trailing 12 months. It was 25 billion most recently, but if you look back from 2015, it used to be over 27 billion. So what's going on here? Well, in the earlier part of the decade, Macys was really getting devastated by Amazon and other online retailers. It was slow to adapt to online sales. It wasn't really excited about it because it didn't want its own customers to shop online on Macys.com. It much preferred customers come into its stores instead of going to Macys.com, and so it wasn't really emphasizing its digital channel. Well, during the pandemic, it had no choice. It really invested aggressively in its digital channel, and now it's a significant supplement to its business. In fact, management has said that Macys is experiencing an interesting benefit from having a website, in that in areas where Macys has a store, online sales are much, much higher. And some analysts found that interesting. Why is that the case? Why are online sales higher in an area you have a store? It doesn't really make sense, right? Wouldn't the people that live close to a store prefer to just go to the store because it's close by? And the reason management says why people are preferring that option is because it makes them feel comfortable that if they were to buy something that doesn't fit or they don't like how it looks on them, that they can go right close by to the store and return it quickly. Right? One of the most annoying things to do nowadays is to try and return something you bought online. Put it back in the box, take it back to the UPS or to the post office to return it. Some companies might charge you a fee for returning it in that way. There's deadlines, time limits. It's a hassle. You got to wait a few days until it gets back there. It's one of the significant frictions from shopping online if you're shopping for apparel. But Macy's has said that since it has so many locations in the US, around 700, that it makes people more comfortable to shop online in those areas. So it's found a way to use its brick and mortar stores to supplement online sales, and now it's working really good. And its sales have recovered. Look at the V-shaped recovery since the collapse during the pandemic. It's really recovered its sales very nicely. And I will show you this next thing. Its operating profit margin over the trailing 12 months, it bounced back way above the level it was at before the outbreak. I mean, you look at its operating profit margin near 10% for a little while. That was not achieved, at since the times in 2014, 2015. Now it's come back some at 6.65% most recently, but longer term, Macy's expects this operating profit margin to move higher, not lower. Higher, not lower. It's only moving lower temporarily, management says, because of all the promotional activity in the industry. Many industry participants uh, overinvested in inventory levels, And so now they've got too much inventory that they need to clear out, and so they're offering promotions and discounts and those kinds of things. That's bringing profit margins down industry wide. But management fully expects this to go back up, and that's really good news for Macys stock investors. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Now the final reason, and perhaps one of the most attractive reasons why I think Macys is an excellent dividend stock to buy right now, and why you might regret not buying it on the dip, is because of the cheap valuation. You're getting Macys stock at a forward price to earnings of just 4.63. Just 4.63. I think out of all the stocks I cover and out of all the stocks I've done videos on, when I've looked at the forward price to earnings ratio, Macys is the cheapest right now. And if you follow my channel, you know I cover a lot of stocks. And so for Macys to be trading at this valuation is really favorable if you're a dividend stock investor, because remember, when you invest in a dividend stock, you get two sources of return. One side of it is your dividend yield. The other side of it is the potential stock price increase or decrease. So if the stock price were to increase, that would, supplement your dividend return. But if the stock price was to decrease, then that would take away perhaps all or more of the yield you're getting from the dividend. So it's important to look at the valuation when you're looking at dividend stocks, and Macys is, it's as cheap as it gets, arguably, trading at a forward price to earnings of 4.6. So for all those reasons, I think you might regret not buying Macys stock right now. And so that's all I've got for this video. Thank you so much for watching. I've selected another video that I think you're going to enjoy. That's popping up on your screen right now. It should be over there. Please click on that. I think you will enjoy it, and I will see you over there.